Good afternoon. On behalf with Peter Siegelman, we welcome our students and our guests, everyone else who is viewing and participating, and particularly Director Ray Farmer, who is our speaker for today. Well, Director Farmer has made one thing clear, which is that he not only he sort of expects questions. I've told the non-students that we will not cold call on them, but we can't make any other promises on that. But he would, for students, please send us, you're welcome. Director Farmer will pause it a couple times, for questions, but you can also send us chat questions if you don't want to ask them directly. And then there'll be plenty of time after the introductory remarks as well. For all of our attendees, we'll sort of go with the student questions first, but we would absolutely love to have comments and questions from others as well, and just send them in as the chat function. And I think we can then put you live, I believe, as well. So we can have this as not interactive, not just online, but with many different voices. It is a great pleasure to introduce Director Ray Farmer, who has headed up the South Carolina Department of Insurance since 2012, which makes him one, we were talking about it beforehand, the 7th or 9th senior insurance regulator, insurance commissioner in the country. That is both a testament to, and he's an out-of-stater. He's not a Yankee like almost all of us, but he comes from Georgia. But he's been the South Carolina director for many, for 8 years. And the average tenure for an appointed commissioner is well under half that, probably around 3 years. So it's also an indication of the commitment that the state of South Carolina has in both the director and his department. We try to make introductions very short because you're not here to hear me speak or us to introduce people when you can hear from them directly. I'm going to also note that in addition to running the department, Director Farmer has decades of experience, both I think initially as a regulator, but also many years working with the American Insurance Association before he came to the NAIC. And perhaps most significantly, and the topic of his talk is 2020. I think Director Farmer was, the title we use, the year we got, used a number of times, but Director Farmer would often comment that, this is not the year we expected, but it's what we got, and the key, and this is what we're going to have to, what we're going to directly deal with. In addition to coming in with very pressing questions in terms of long-term care insurance, health insurance markets, and other issues, COVID-19. And then, the civil, very important, the civil unrests during the spring and summer, and all, important insurance issues that these presented. That was Director Farmer's year as president of the NAIC. I'll turn it over to him, and thank you very much.
Thank you, Peter, and good afternoon, everyone. It's certainly good to be with you today. I appreciate Professor Kotchenberger asking me to be part of this group today. I've known Peter for probably over 20 years, worked with him when he and I were both in the industry, and obviously I've seen Bob Yoss's picture up here as well, and Bob and I have known each other for a little bit longer than that probably, but my role, Peter's role, has certainly changed. You know, without me telling you, that Peter serves the citizens of this nation as one of the NAIC designated consumer representatives, and as you very well know, Peter is well represented by the regulators and the industry, and is a moderating and reasonable voice, sometimes in the middle of heated, needless rhetoric from both sides on some occasions. But before we get started, I will give you my position on what the NAIC has done, what I've done in South Carolina. So any opinions expressed during the next hour are basically my own and not the official position of the NAIC on any of the subjects that we'll chat about. but I'll try to make sure I distinguish between an NAIC position and my opinion, if indeed I have one. I plan to cover a number of different subjects that are important to me as a director in South Carolina and in my role at the NAIC and other state regulators. I've got a strong interest, though, as Peter said earlier, in discussing what you have on your mind. So please feel free to ask questions in any way that works. If you want to put them in the chat box or send them to Professor Kotchenberger for him to ask, we'll do that. So I understand we have maybe a few regulators from several different states in the class, as well as students that may or may not have an insurance background. So, but kind of assuming most of us have the basic understanding of the National Association of Insurance Commissioners, of the NAIC, and how it functions. But those who may not, I will tell you that the NAIC is our regulatory support organization of state-based insurance regulators. It serves also as our accrediting body. Every 5 years, an accreditation team will visit each state Department of Insurance and verify compliance with all the relevant statutes and regulations as they apply primarily to the financial regulatory analysis and the financial examination of insurance companies. That allows us to be on equal footing with any other state. It allows insurance companies, insurance consumers to know, since we have a state-based system, all states look at the regulatory aspects of the insurance industry the same way. It just so happens that in 2021, this is our year for our next 5-year accreditation review late this year. So if you're like me, all of us couldn't wait for the year 2020 to be over and done with. It was quite a year, as Professor Kotchenberger outlined in some of those respects. But we certainly had an interesting start to 2021. It is hard to believe that we're already a month into this year. And I never imagined that we'd still be struggling through a global pandemic as we sit here today. But I'm, for one, am pleased to see that I think there's a little light at the end of the tunnel. I'm pretty optimistic anyway, but I happen to be of the age to qualify for the vaccine. And I'm proud to say that we got our vaccine, our first dose, about a week or so ago, and I look forward to the second dose next week. But really to the day when it's the vaccine is just as easily accessible as the flu shot. We can begin to regain some sense of normalcy. But for now, we continue to make the best of challenges that we face, and that was certainly true, our approach to 2020. The NAIC, just like any other organization, has officers and the membership of elected officers. But when I stepped into the position of NAIC president in January of last year, I was prepared for a year based on my 3 previous years as an officer. I was prepared for the grueling travel with sometimes unrecognizable cuisine and balancing the important work to be done on behalf of the NAIC with my day job as the director of the South Carolina Department of Insurance. While the balancing act was certainly necessary, the travel and foreign food was short-lived. As all of you know, everybody's world came to a standstill almost overnight last March. We had to make some quick adjustments to respond on behalf of our organizations and the consumers we serve. Having looked back on these 12 months, I can tell you that I'm proud of the way that the NAIC, state regulators, and the insurance industry itself rose to the challenges that we faced. It's been said that the NAIC as an organization is at its best when things are at their worst. And that could not have been truer for 2020. As with all incoming presidents, I started the year with a set of priorities. They'll let you name a priority or 2 that you want to tackle during your presidential year. I had two of those priorities, and they were to address climate risk and resiliency and to continue the work toward addressing the systemic issues facing long-term care insurance. But by March, it became clear that our priorities had to pivot, and pivot we did. The first major issue that we were confronted with in my year as president in early March was a practical issue. What were we to do about the upcoming spring national meeting where almost 2,000 people could be present? After a heart-wrenching conversation with the other officers and key NAIC staff, we made the correct decision and transitioned to a virtual meeting in just a matter of days. Obviously, all national meetings and any other NAIC gathering has been virtual since that time, and even as we speak, the NAIC, the commissioners are meeting today and tomorrow. We normally at this time of year would meet in all together. This time it was supposed to be in Florida someplace. One hotel ballroom looks like another most of the time. But we're meeting virtual, and if I run out of steam here in the next few minutes, I've been talking already for an hour and a half this afternoon. But here we are a year later, and the officers will soon be addressing again how to handle the upcoming April spring national meeting, how it will be held. We have polled our members. We'll be chatting about that over the next few days, and you'll see a decision coming out probably in the next week to 10 days to 2 weeks, but it is now about time to make that decision again. And quite honestly, it's going to be hard to get that many people together. Companies now really aren't traveling. So look for that decision, but we'll use common sense again, I'm sure. But as regulators, our initial priorities in response to COVID-19 were twofold. As we transitioned to working remotely, we also had to provide the critical services for our consumers, and we needed to ensure access to COVID testing while maintaining access to treatment for other health conditions for our citizens. Once those two goals were accomplished, we sought to minimize disruptions and regulatory hurdles for consumers, insurers, licensees through changes to licensing and reporting processes and premium deferrals. From a South Carolina Department perspective, our first priority was to engage our health insurers to determine how they were responding to unique challenges our consumers were facing due to the pandemic. But in my opinion, they answered the call well to ensure access to care for their members when they needed it most. We created, like everybody else, a dedicated website webpage on our website with great information for not only the companies but our consumers to kind of go to one central spot to find out all things insurance, regulatory related, and COVID related. But regulators from across the country took action in a number of ways. One was to remove the cost sharing to increase access to coronavirus testing. Regulatory guidance was quickly issued to increase access to care through telemedicine and early prescription refills. State regulators also worked to reduce burdens on claimants and policyholders through extensions of claims deadlines and providing premium due date extensions. We worked to provide new accounting and reporting guidance for the treatment of overdue mortgages, as well as extended the due dates of quarterly filings to provide some relief and flexibility for insurers, and honestly, by extension to business owners, by allowing more time for the insurers to collect premiums before reporting the payments as late in their statutory financial statements. As shelter in place and lockdown orders started making their way through our states, our driving habits began to change. We did what we were asked and told to do in most cases. We stayed home. We didn't drive near as much. So noticing this, Regulators worked with auto insurers to return premiums to consumers, and the state insurance departments urged insurers to issue immediate reductions in auto premiums to reflect lower claims costs. Those relief measures generally resulted in reductions for 15 to 25% for customers' premium payments for one or more months last year. And according to the Insurance Information Institute, the industry returned approximately $10.5 billion to policyholders. You will hear us as regulators try to take credit for just about anything that comes down the pike. And we were helpful to the insurance companies in approving rate filings quickly to refund their premiums for those several months. If a company had a direct refund, they had to make a rate filing and we could turn those around quickly. If it was a mutual company, they could do so by a dividend, and we didn't have to approve those. But this is a perfect example where competition in the industry worked and worked well. One Friday afternoon, I got a call from an extremely large auto insurer and said, Director, on Monday morning, we're going to announce that we're going to return or refund premiums for this month and last month to 20 or 25%. And we just want to give you a heads up that we'll be making a filing, but we're not going to make this announcement public until Monday morning. When one major auto writer made that announcement, it was interesting to watch the rest of the dominoes fall. By Friday of that week, every major auto writer followed suit and started making refunds. Now, that company told me this is not an actuarial decision. We don't have enough data to base this decision on. It's an economic decision, and it's a competitive decision. So you see how competition works, and it worked well in that instant. And then regulators had to come in and help make sure, we could accommodate the companies doing all that. But quite honestly, we probably played a more minor role in that than we would have you to believe. But another key element of the NAIC's COVID response was educating our consumers and insurers on the quickly changing state of the industry. If you think about things that were going on, we had never seen that before. So, that we needed to make sure our consumers were prepared for anything that was coming down the line. And warning those at high risk for potential scams was a top priority. We used our social media channels to get the message out, kept in close contact with our licensees, and issued bulletins and alerts to provide guidance to our stakeholders. Just like everything else, when a natural disaster happens or COVID-19 happened, we saw a lot of things. We saw the good come out in people, but we also saw the bad actors show up and try to take advantage and continue to try to take advantage of our citizens. Over the last 5 days, we've issued 2 consumer alerts for our consumers, for companies trying to take advantage of the elderly. Really, they're trying to get their personal identifiable information, but they're calling and saying, we want to offer you last life expenses, burial expenses, and we tried to trace all of that. You could not call the people back, and so when our investigators traced it, they got as far as Nigeria. They were spoofing. It looked like a South Carolina area code, or it was, but it was a scam. We've issued another alert just this morning about warning our citizens that they don't have to pay for the vaccine. So it's just those simple things that the bad actors will take advantage of our citizens before you know it. But it is my belief that our collective efforts in response to the pandemic probably not only saved lives, but also allowed many businesses to remain open and ensured consumers would be able to stay in their homes during this extremely unprecedented times. We address some issues with our licensees, people that need a license to sell insurance or be an adjuster. All of a sudden, all the testing facilities, all the educational facilities closed, overnight when we all, were mandated to stay home. But we had individuals that were trying to get into the insurance business, new virtual graduates of colleges, and others that needed a license. So most of our states have a provision that they can issue a temporary license. I'm not so sure we have that in South Carolina. Our statute was a little fuzzy, but I really didn't care about that. We provided for temporary licenses. I was not going to stand in the way of somebody trying to get a job in these uncertain economic times. So we adopted our own temporary plan and granted some licenses. I thought it would be very, very few. My bet in the licensing pool was less than 10 licenses. I've learned not to bet with anybody around here because we issued 1,987 temporary licenses between March and September. Things opened back up, and so we stopped that in September. But we've also learned we can provide remote testing for our licensees, and they don't have to go to a central location anymore. We figured if the third grade students could figure out how to do a test online, we could do that as well. That will be one thing that will stick. We will continue on as we go forward when we do come out of the pandemic. So COVID-19 was not the only time the NAIC had to pivot in 2020. Following the tragic deaths of several Black Americans, the NAIC knew we must step up and lead on the issues of race and diversity. NAIC formed a special committee on race and insurance, the first of its kind in our, at that point, 149-year history. What followed was many hard and awkward but necessary conversations around issues of race, inclusion, and potential biases in the industry. So we could not meet in person. So the NAIC had probably 3 different sessions of commissioners only, lasting several hours a piece with every commissioner. We have 56 jurisdictions. Every commissioner was allowed to make his or her comments, tell their stories, tell what has happened to them over a lifetime. And those were just extremely tough conversations. They needed to be had. And by having those conversations, we established this special committee on race and insurance, and everything is on the table. If you can think about what needs to be addressed, this issue, it's on the table. We have established 5 different work streams, and they're charged with making recommendations on actionable steps to better serve historically underrepresented groups. We'll look at the level of diversity and inclusion within the insurance industry, NAIC itself, and our state departments of insurance. We're holding that mirror up to ourselves as well. We'll also be reviewing what barriers exist that potentially disadvantage people of color within the 3 sectors of the insurance industry: the property and casualty side, life and annuities, and health insurance lines of business. Those work streams are meeting now, and they will be reporting back up to what we call our executive committee, and they're in the process of doing that now, and a big report will come out. And usually at the end of an initiative like that, you meet, you have a report, and that's the end of it. That could be no further from the truth for us in this initiative. That report will serve to inform us of our decisions going forward. This initiative will continue to be a priority. It's a priority this year under the leadership of our current president, David Altmaier, Commissioner from Florida. But all 4 officers behind me have committed to make race and insurance a high priority in their presidential year. The NAIC is in this for the long haul, as is the insurance industry. I talked personally to probably every CEO and a number of board members of every trade association, a number of the larger carriers. Companies are saying the right thing, said the right thing in last summer, but now some of them are actually putting their words into action, and that's a good thing to see. I think you'll see all across the spectrum a lot of changes, whether it's the makeup of a board of directors, gender and race, whether it is bringing more minorities into the insurance industry. If you'll look around, I'm not the only old person in the insurance industry. We're aging out right now. And so this is we need a pipeline of new employees. And so some of us have already had relationships with colleges and universities, with internships and so forth. All of that will continue, but once you get folks into the job, you've got to make sure everybody has the right training at an executive level. We need mentorships. You'll see that as well. And then you get down to practical things. A friend of ours, George Nichols, who used to be the insurance commissioner in Kentucky, was the first Black president of the NAIC, worked for a number of years with New York Life, but recently, last couple of years, he's president of American College of Financial Services. They have come up with a number of action items, pillars, that are extremely practical. One is to advance financial literacy in the Black community, directed toward Black females, because in single parent homes in the Black community, 86% are led by females. This is a direct effort to educate our people as we come along, so we know exactly, not only for insurance opportunities for employment, but how we go about buying insurance. How do we transfer wealth to our next generation? All of those are practical approaches that we'll see done. I've no doubt that we'll continue to do the work that needs to be done around race and inclusion. But like I said, we'll continue to hold that mirror up to ourselves as well as the industry in years to come. I'm going to pause right here after those two subjects of COVID and the NAIC response and race and insurance. And Dr. Kotcheberger, I'll see if there are any questions now that we can address. And trust me, any question is appreciated, or you can't ask a question that I won't take.
Thank you. And so we have at least one question. I'll ask for Haley Hinton, since her Wi-Fi is not acting up a bit. In our fall insurance and discrimination course, which is Bob Yoss's course, we focused a lot on understanding the dark past of insurance, including the relationship of insurance to slavery and racism in America. As insurance departments throughout the country focus on confronting racism, inequality, and biases within insurance, what is the South Carolina Department doing, particularly in response to the NAIC Special Committee on Race and Insurance?
As president of the NAIC last year, the committee itself was co-chaired by the two top officers. I was president, David Altmaier from Florida, incoming president. We co-chaired the other two officers were co-vice chairs of other groups. But we have looked at everything that we do here at the Department of Insurance. And one of the things that we're looking at from the NAIC perspective is not only how the industry performs in this area, but what do the departments of insurance do? So not every department has a metric to determine this. We do. Our EEOC folks send out a report every year. We just got ours the other day on how we do on race and insurance, how we do in all of those lines, how the breakdown of our employees in the department. And I will tell you quickly that we do well. I'll tell you even quicker than that there's plenty of room for improvement. I don't care how well you've done in the past. There's plenty of room for improvement. Like I said, we're discussing priorities within the NAIC now, and I just led a group an hour ago to talk about our priorities in we come from 56 diverse jurisdictions, and some of our members says we are a smaller state, and quite honestly, these are out in the Northwest. We don't have a large minority population, but that does not stop us, they said, from looking at the issue and doing better. This has been an educational effort for everybody across the country. We've had a number of people have say the same thing, but everybody is at the table and everybody is looking to see how we can address the subject and how to improve. But to answer your question, in South Carolina, we continue to meet. I am fortunate that I get the final say-so on every hiring decision. And when our different units are looking to hire somebody, it's up to me, but I have the privilege of making sure that our pool of candidates is extremely diverse. We're going to hire the best person for the job, but we're going to do that from a great diverse pool. I will tell you, I talked about internships earlier. We do have internships with our various colleges and universities throughout the country, but my best source of interns, and it will show you that no matter what you major in college, you don't have to be an insurance major to have a career in insurance. But one of my best sources of interns, productive, has been with the City of Columbia, the Columbia Urban League. We established that relationship. I had it a long time before I took this job, but the Urban League itself has an intern program for college students, and we access that program, and we've got a number of success stories with young people that have young people that have been interns. We didn't have a position when they were finished the intern position. We didn't have an opening, an FTE, so we hired as temporary employees when an opening came open. We've got one young man that's been here over 5 years that is my shining star in up and coming in the IT department. So that was a longer winded answer than you probably wanted, but that's kind of what we're doing. Peter, anything else?
Yes. Dan Schwartz has a question.
Well, so can you hear me?
I can.
Okay, so
I'm looking sideways. It's because you're all over here.
In the chat, but I'll also just read the questions. So
Well, I can read it if you. Oh, go ahead.
I can ask you, look, so there's been a tremendous amount of talk about dealing with race and insurance, but as someone who's been following the NAIC for a long time, your description of how these issues often are dealt with through the NAIC rings true to me, that a lot of times reports are produced and committees are assembled and then nothing happens. And I particularly feel that this is a big risk with respect to race and insurance, because despite the fact that there's all this attention to it, the industry and state regulators have still very much resisted producing any data about how insurers' practices actually affect minority communities. So, for instance, there's no data about whether or not African Americans in general pay higher premiums than non-minorities. There's no data about whether or not African Americans' loss ratios are lower than non-minorities. There's no data about how often African Americans are targeted for fraud investigations versus non-African Americans. How can the NAIC or anyone purport to deal with issues of race and insurance when we don't even have data that is collected or produced about how insurers' practices actually affect minority communities?
Great question. So sometimes in life, Mr. Schwartz, you find yourself in a place where you never expected to be. That kind of happened to me and every other commissioner last summer, but this is our opportunity to address those issues. And as I said earlier, everything is on the table. We're just having our discussions of priorities today. It sounds like you were in the room because those very issues came up. So we've got a breakdown of 5 work streams. Those 3 that address the different sectors in the insurance industry, life and annuities, property casualty, and health. You'll see an effort to start collecting data. You can't manage what you can't measure. And so you raise great points. But I think you'll see, we haven't been down this road before, this seriously. Right? So I think you need to keep your eye on us. You need to hold us accountable. But I think you're going to see us make great progress in all of those lines. One of the first places the NAIC members took a stand toward greater equality was around the potential of proxy discrimination within the artificial intelligence tools. That's an extremely big issue. Yes, sir. I didn't mean to interrupt you.
No. I'm interrupting you, so I apologize. But on the proxy discrimination point, actually, I sort of think it suggests the otherwise, because you say that the NAIC did something on proxy discrimination. What the NAIC actually did is adopted a white paper that encourages insurers to avoid proxy discrimination and then doesn't define what proxy discrimination is. So there's no requirement that insurers avoid proxy discrimination, nor is there a definition of it. So how is that not confirmatory of my fears that nothing will actually get done? Why is putting in a white paper that insurers should seek to avoid proxy discrimination, how does it actually get anything done?
So there are guidelines in the white paper, but they leverage existing state authorities that were established to articulate general expectations for business professionals and the stakeholders across the industry. We have met with some companies that are looking internally at their own algorithms, and they're developing tests for their own purposes to go back and look at their own underwriting models in artificial intelligence. They're dissecting themselves from within to see, whether there's unintentional biases or not. We can discuss this till the sun goes down, But you've got to look and see what we come up with as we go down this road. This is not, everything is on the table, but it's a real big table. There's not one easy answer to any particular question that arises, but I would encourage you to stay tuned. We did early on in this process. We had a commissioner to say basically the same thing that you articulated, Mr. Schwartz, in that if we do a report at the end of this thing and we pat ourselves on the back and go our separate ways, he said, I don't want any part of it. And so our efforts, that's the furthest thing for our mind. I think you're going to see actionable items all the way down the line. You may find something to disagree with, but in this issue, I think we're going to make great progress.
Thank you. I think Alexia has a follow-up question to that.
My question is actually related to the COVID.
Oh, go ahead.
One. Yeah. So, South Carolina, you mentioned the immediate changes that South Carolina was able to implement in response to the COVID pandemic. And I'm curious how you guys are approaching keeping those in place. Are they going to be in effect for the duration of the pandemic? Are you looking at economic factors to see how things improve? Or do you have some arbitrary, like 2 years, 3-year period to keep those in place? Or are you even looking at keeping some of them in long term?
I think the real answer is all of the above. Our governor issued an emergency order that gives agency directors authority to put certain things in place. As long as his emergency order is in place, it's still in place. He renews it every 6 or 8 weeks or whatever the time limit is. But there are some things that we will continue. We've learned an awful lot. We're a small department. We have not quite 100 people here, and overnight we all had to make plans to work from home. So what we did is send our IT people to the state surplus store and got everybody a laptop, a used laptop, and so we really didn't miss a beat. The very next day we were up and running. We've had to change some things, but we're learning that although as much as I want us all to be in this office right here, that's not going to happen. We're in a phase now where we can bring back up to 50% of our employees. I get a note every day of how many people we have in here, and it's usually between 20 and 30%. And so when we're all done and back at work, we'll sit down and see what worked and what did not, what we can do better. Some of our folks, I think, need to be in this office, but do examiners, do analysts, do those kind of people need to be here day in and day out? Well, maybe not. So I think for an old school person, you'll see new and innovative ideas coming forward. Hope that was close to answering your question.
Yes, I'm in Nevada, and we promulgated emergency regulations early on in the pandemic. And so, some of the things I think about are, how long does it make sense to keep these in place? And with emergency regs, they have their own time limits. But, I'm trying to see what people are thinking about as far as how long do we before we have to reevaluate it, so that it doesn't have an unfair impact on consumers, right? And that the market itself is still protected.
Right. I think you'll see from my perspective, as long as the pandemic lasts, we're earliest anybody is going to be back anywhere out of this pandemic is probably summertime. Companies now aren't, they've pushed back people in the office to June and July. There are prohibitions about travel, and until that eases up and people go back to some normal way of life, I think you're going to see all of these methods still in place. But one benefit is, we asked our companies to start making telemedicine more available. I think that's going to be one of those things that stay in place. We're learning that we don't have to go sit in an office with a lot of other sick people before we see the doctor. So I think that you'll see a number of things stay in place, and but I do think the benefit is it's going to make each one of us, whether you're in the insurance industry or a regulator, take a look at what how you've done business in the past.
Thank you. Bob, you've had a question for Bob?
You know,
Go ahead.
I kind of expected this. I was looking forward to this. I've never known Bob Yost to be shy about it.
Well, this is not a hanging curveball, but it's good to see you, Director. And actually, it's another slice on Alexia's question relating to COVID-19. And that relates to pre-existing conditions. So we obviously have an Affordable Care Act, which may continue into the future, may disappear. There are sort of other kinds of health coverage, limited duration health coverage. There are even things aligned with health insurance, long-term care insurance, or even life insurance, where previous health conditions may be relevant. Are you seeing anything yet where companies are either in their forms they file with you, or their inquiries or their rates are looking at the potential application of a pre-existing condition thinking to COVID-19 and taking that into account, maybe denying coverage, maybe uprating coverage? Do you see that as an emerging issue over the near term?
It is an emerging issue. We have seen no filings. And I've had some conversations with some groups. It would be hard for me to understand, hard for me to approve of a filing that treated somebody that has had coronavirus and has recovered from the coronavirus. You know, why are you even thinking about charging them more, whether it's life insurance or health insurance? No more than you do when somebody gets over the measles, mumps, or the flu. It is something that regulators are watching, are prepared to address. We would not approve such a filing in this state at this point in time.
Thanks, and good to see you again.
Good to see you.
I think the next person in the queue, I think, will be very familiar to you, Sonia Larkin-Thorne.
Hi, Commissioner Farmer. It's good to see you again. My question, and I guess it's also a concern, is the NAIC reaction to the whole issue of race and inclusion and the formation of your committee. I challenge you and the industry to tell me that this issue in terms of employment and the issue in terms of market penetration and availability of insurance to poor folks and people of color is a new issue. I've been in this business since I graduated from college. And I don't need to remind many of you as to how old I am. But this started back in the 70s when I was hired. And the industry has come up with one excuse after another as to why they can't insure us and why they can't keep us as employees, like we're some special specimen. This industry has been able to figure out a way to insure Uber and all these new entities, but for some reason, poor folks and people of color are something special and they can't figure out a rating mechanism or the ability to insure us. And the NAIC, which has been doing studies for the last 40 years, seems to accept these excuses. My question to you is why?
I didn't expect the question from you, I'll tell you. But it's a great question. And as I said earlier, we have a long history in this country of social injustice, treating people in a way that they shouldn't be treated. This is not a new issue. You are younger than I am, but we grew up in a time where things were, we have a lot of room for improvement. We still do. But as to your question, as to how why companies are treating people of color different than others, we've got to measure that. Mr. Schwartz asked a great question earlier. So Sonia, I don't think until we get the data that shows that, and I think you're going to see us do that. You know, we have found ourselves at this opportunity in time, and we've got to take advantage of it. I'm not so sure that really answers your question, but it's, you know, we've got to address it. I don't know if there's a good reason for the why not.
Thank you. Let me just do one quick follow-up, and that is in terms of the committee, Race and Insurance and Inclusion's work. I recently saw a copy of a letter that the industry sent to you condemning consumer reps and those of us who challenged and questioned issues during the last committee call in November. The letter I saw because a consumer rep sent it to me, but I understand there was a response to that letter from you, which has not been made public. Can you tell us why?
Yeah, so there has been, as I said earlier, very early when I was talking about Professor Kotchenberger being the calming voice to a lot of needless rhetoric. In that instance, there was needless rhetoric a little bit from both sides, but that response from that trade association was certainly unnecessary. It did them more harm than good just by writing the thing. You know, that was an NAIC response. I'm not so sure that it's a, well, the letter to us was not private, so I mean, was private, so I would imagine the response was. But that's a good question, Sonia. I'll find out. I don't know. I mean, you know, I've signed it and participated in the drafting of it. But usually, if you send a letter in response to somebody who did not make a public letter, you're going to keep it private. But I'll tell you that was that letter was to the NAIC was certainly unnecessary.
Thank you.
And now Tom.
Yes, sir. Thank you, Mr. Farm, for coming and speaking today. My question was more my company, they focus and their procurement team is looking at diversity and sustainability in their procurement. One of the issues that we came up with as part of the insurance team is that we don't really have a good standard for evaluating whether insurers are committed to diversity and sustainability. And this seems to be a potential opportunity. If companies are looking to choose or prioritize insurers that do commit to those, you know, those goals, if there is a way to evaluate those insurers and maybe rate them, like an efficiency standard would be, it could work well to promote the ideals that we're trying to fix in a variety of areas and ways that the NAIC or regulators choose. Is that something that is even possible? I wasn't even sure about that.
I don't think it's impossible. I think you'll need to look at the will to do that. I think the state of California requires corporations to report on how they're doing on diversity, even at the board level, makeup of boards, and has requirements for diversity on the board. I don't think you'll see that countrywide, but that's a standard. But I do think what you'll see is an attempt by, if not by regulators, but by some carriers to show the improvements that they've made. If the industry sees any issue, I don't care if it's a refund of auto premiums or anything, even we've seen early on some competition among companies on this issue. So, if a company sees any benefit, and it's always going to be financial, and you can see the more diverse you are, the better your financial return is. You just see that. So I think to get to that point, you know, I don't think you're going to see any standard that says companies at this point have to report, but we're going to be in this thing for a long time, and I think you'll see as we go through things that might be objectionable, you know, early on won't be later on.
Is there, thank you. And kind of following up on that, but is there a way to do like a rating system almost? And again, not instead of it forcing them to meet a standard, instead to say, you've met this arbitrary standard, not arbitrary, we, you know, ideally data driven, again, going on Mr. Schwartz's point of diversity and inclusion. That way, you know, company X can say, oh, I want to meet a gold standard, you know, a company, so I'll go and use this insurer as opposed. I don't know if that was even possible, but again, it's complicated as you've made
it
very
is,
clear.
but I don't think it's a stretch to maybe assume that companies on their own will develop their own gold standard and tout those as they achieve those. But in so far as state regulation or the NAIC of developing that, I think it's a little early to guess as to how that would come out.
Thanks, sir.
Thank you. Olivia?
Hi, yes. There's been a lot of debate over the years regarding underwriting and using credit scores because they can disparately impact certain races. And I'm curious if the Committee on Race and Insurance is addressing that issue.
Yes, they will. In our discussion, even today, you know, we're going to have different perspective on the use of credit in underwriting. Currently, it's permitted. There are a number of states that are looking to prohibit that use of that item to underwrite. You see, Commissioner Kreidler from Washington State has legislation now to prohibit use of credit. To answer your question, the NAIC will look at it. The Committee on Race and Insurance will look at it. We'll study it. It took a long time for use of credit to become a standard. I don't think you're going to see it go away overnight. I think it's possible. I'm seeing companies now that make filings here and making underwriting decisions and are making bold statements on their filing. We no longer use credit as a criteria or as an underwriting standard. So I here again, once you see companies doing that, there's some of our insurtech startup companies that did not even consider the use of credit, and they're publicizing that. Others now are moving away from credit. You know, I think competition is going to drive that probably quicker than regulators, but it may be a joint effort at some point in time. It's not here yet. So.
Daniel, that's then we'll at least need to break, but Daniel, go ahead.
Thank you. Thank you for joining us, Director Farmer. So the last question brought up what I consider to be the low-hanging fruit when it comes to underwriting, you know, credit scores in automotive. And that just kind of makes sense. It's really easy to question, what does my credit score got to do with my ability to drive a car? But what about other underwriting factors, particularly in more opaque areas like, say, life insurance? Is the NAIC going to wade into that? And are there any particular areas you're willing to discuss that maybe the NAIC would look into beyond just credit insurance or beyond just credit scores?
Well, I think we're on the verge of seeing a sea change in underwriting, period. I think it will start in the property casualty sector. You're already seeing that. You're seeing years ago, consumers did not want their driving habits to be judged. The telematics that you put in your car, some of them easily or even accessed on your cell phone. We've got one company that's the way they underwrite is use of your cell phone in the car and how you drive. So I think you'll see a shift in the way the industry underwrites, at least on the P&C side, and at some point, well, I think you're beginning to see it on the life side as well. You don't need near as many pests that require bodily fluids anymore. The standards are changing, and I think we're on the verge of seeing that. Things that came in early in my career are no longer used. So I think it will continue along those lines.
Thank you, everyone. And thank you very much, Director Farmer. It's 5 o'clock. I know you're in the middle of an NAIC meeting, so you may not have time. If you have a couple extra minutes, we can go. We always limit that if you have the time. But again, we know you're in the middle of another meeting.
Peter, I am, but I'll maybe a few more minutes. I've got to get back before they conclude in another 15 minutes or so. But yeah, I appreciate the exchange. Some of the things that were on my list to discuss were the biggest issue I've got as a regulator right now is what to do with long-term care insurance. It was one of the two priorities that I've started the year with, but it was a continuation of a priority that started several years ago. As you know, long-term care insurance has been in the marketplace about 30 or 40 years. It was underpriced, probably oversold, overpromised. The actuaries missed every imaginable assumption on the rates. They even missed what the lapse rate is. When they think you're going to drop the policy. Lapse rate for long-term care is 0.5%. So that is one of the bigger issues that we've got, but maybe that's a discussion for another day.
It's a great topic. We do have Samantha has her hand up for a while.
Yeah, it was just a follow-up question to an earlier point raised about ratings, and then you had mentioned that you realize that the racial disparities and addressing those injustices is a long-term goal. And I was wondering if you get the sense that insurance companies themselves believe that that's a long-term goal and understand that this isn't going to be a quick fix. And then a comment on the idea of rating and kind of giving a standard for these companies is that at least I have a fear of allowing companies to then pat themselves in the back when they have a percentage or a rating that says, well, we've done our job and now we're done. Because I don't think that that's something that is in the near future for any of them.
Thank you for that. It is a long-term effort. My concern is, and one reason I wanted to make sure NAIC is going to be looking at this for, the farthest point out you can go with officers is another 4 years. So at least for 5 years that we're going to look at this initiative. Our concern early on with companies that were, tripping over themselves, making press releases as soon as all the events happened, is that it would be just that. A press release. But I'm an optimistic sort of person, but I think in this instance, we're going to see progress. Are we going to see as much progress as there ought to be? I don't know. I don't think so. But I think we're going to see progress. I think companies certainly understand the situation we're in. And it's going to be up to them to fix it within their own You know, they've got to want to do it. We're regulators are going to hold them to that, but they've got to want to do it, just like any other behavior. But I think that we're going to see those changes. Are they going to be as extensive as Sonia mentioned? I don't know.
That's well, thank you. That's both a good point. Unfortunately, because we need to end for your sake. And you've given us a very generous amount of time. And ending on uncertainty is also quite appropriate both for 2020, 2021 in this issue. But Director, thank you not only for your time, but it's not always easy. But I'm not surprised that you were as forthcoming as you have been, and thank you very much also for that. It really benefits all of us, students and audience, and Peter Siegelman and I. So I'd like to thank you very much for your time.
Yep.
Thank you.
Bye-bye.
I've certainly enjoyed it. I hope the rest of you have a good rest of your day.
Thank you.
Thanks, you too, Director. Thank you.
Yeah.
And we'll conclude the meeting, and thank you everyone for participating.